Hello, trading is closed on May 13th, 2025. As always, we'll do our disclaimer before we go over our calls and then make our predictions. This is my trading plan for tomorrow. Tomorrow is the 14th of May, 2025. Please remember, I can change my plan completely. I can be completely wrong and trade at your own risk. Also, I had personal business. Didn't have much time to look at things, but I don't think if I had more time I would have changed any of my predictions. Look for the pattern today with the early high. That's this. Tomorrow has the early low. We said unless we reversed yesterday's breakout sharply and convincingly, we should trade higher, and we did trade higher, so we've had a significant breakout, which doesn't yet tell us anything about what will happen tomorrow. Well, we got a buy signal in the afternoon. That played out, and this move is called false, but this whole rally was called false by the system. Gives us a target of 58.79.40, and unless we gap up smartly, that's my call for tomorrow. That's not really too far under where we closed. It's only 7 points, so in the scheme of things, with a target lower and it's that close and there's no stop, it's kind of you need some more stuff to take the risk of playing for this. It's an argument against going long here, and there is some other argument for this being a top, which we'll go over right now, but that's my call for tomorrow if we don't gap up. And we have this wall into the close, so you could easily gap up. That we don't know yet. We gapped up, hit a higher high, closed under all these highs. That's a negative pattern. Time doesn't run out until tomorrow, early tomorrow. So if we gap up here, which is entirely possible, you have the normal pattern. If it isn't the normal pattern, if we don't gap up here, should be a straight line drop, which we haven't seen. So if we don't gap up here, we should trade much lower. It should be a straight line drop pretty early, and that we're going to know before the open. I think it's kind of risky to take risks with your money just based on the wave count when there's certainly more than one wave count that works. But there is a wave count that says this is wave A down with good fibs, and this is an ABC with wave C having an ABC with C equal to A with good fibs. So if we do drop from here, there is a valid count to give us wave C in black down, but certainly, as I say, that's not the only count. I have some other ones that work with the top here too. This just looks like the cleanness, but again, just because one count works, that doesn't mean some other counts won't. And if we gap up here, it kills the whole idea, as always. But for right now, we're looking for prices that are at least slightly lower. But if we get the sharp move down, a straight line drop, it could be much lower unless we take this out, and that we don't know yet. So Wednesday's pattern has a really low regardless of where we open. So lower target. If we don't gap up smartly, the rules call for it to print. We gapped up at a higher high, closed under intraday highs, and the normally bullish pattern didn't close near its high. And all this argues for lower prices printing tomorrow, unless we gap and promptly overtake the high a day. That doesn't require nor preclude closing higher. Just because you have lower target doesn't mean you have to close higher. That doesn't mean you have to close down. But for right now, unless we invalidate this, should trade lower tomorrow, and that's today's call.